because if you get into this business, you're going to pay stupid tax, no doubt about it. You see these pretty performance, but you don't understand that's not how it all pay. I've seen this again and again in these financial models I get from potential syndicators. But I definitely think getting with a more experienced individual and partnering with them, even if it's at a junior level, would be good for people. Starting at, you can't really learn how to swim unless you jump in the pool.
All right, welcome Real Estate Hustlers podcast. I'm your host, Josh Appleman. Today we're joined with Ken Doble. Ken went from fixing toilets in a 24-unit building to CFO to COO of a 23,000-unit company, survived the 2008 crash, and co-founded QRC to buy underperformers, fix what's broken, and deliver on real returns. Ken, we appreciate you coming on the show today. If you could, let the listeners know a little bit more about yourself.
Well, thank you very much for having me on the show, Josh.
Yes, sir.
I started a long time ago, back when there were paper ledgers and typewriters. So definitely probably older than a lot of the people we have on here. But definitely started off in the early 90s and got into actually flipping houses. So I started with a company that was buying and selling houses. And got out of the military. I was a 2-time combat vet from 82nd Airborne. And I came back, got my real estate license. We started doing VA and HUD repos. And I didn't really know what I was doing. There was an older gentleman, and he's the one that still has a lot of the houses and stuff. And there was a disagreement, and I ended up needing a job, and I got a job with a company called Miles Properties. I was a property manager, and it was basically a small little 24-unit apartment complex. And I didn't have any idea what I was doing, but I had common sense. And I was able to lease it up and do some basic things that they were pretty impressed with. And then they were complaining about their accounting processes, and I knew computers. So I said, well, I can do that. I'd never taken an accounting class, but didn't think it could be that hard. Read a few books on it and set up their entire accounting process. And from there just grew and expanded. And whatever problem came up, I would simply figure out how to fix it, and eventually became the chief financial officer and the chief operating officer.
Wow. That's so how many units did the company have when you started with them?
When I started with them, they had, probably less than 70 units.
Oh, yeah. So then and then you all got it up to 23,000 units?
We also had about $350 million of development, high-rise condos that also blew up. We'd already had them pre-sold, and we got to see that whole massive explosion of everybody walking from their deposits and suing everybody.
So that was 2008 era?
Yes, 2008. That's anybody that's lived through that will forever underwrite deals differently and make sure they have larger contingencies and realize that you're not as smart as you think you are.
Yeah. Well, I mean, and you don't know what you don't know, for sure.
That's
but right. 23,000 units. So what was that comprised of? Was it syndications? Was it, how was this all put together, structured?
It was all high net worth investors. It was all syndicated, every bit of it.
And it all went back to the bank?
Every bit of it went back to the bank.
Dang, that's a shame, because there's so much work and effort that goes into building a portfolio. And how many years did it take to build up that many units?
I took 15 years to do it. Daniel Miles, who was the CEO of the company, he's a great guy. He's a visionary, very aggressive. And aggressiveness pays off. I think, look, he's recovered and he's done very well after the crash. Like most people, you learn from your mistakes and you recover. I actually started another company called QR Capital with the chief investment officer, Christian Shields, who's a lawyer and an investment banker. We started in my basement, and that we bought about 9,800 units this last cycle. We sold almost all of them. We just bought our first deal in several years in Johnson City. It was an all cash transaction, a 576 bed student housing deal.
Interesting. What is your take on student housing for the future?
It's an interesting thing. I do believe there's going to be a lot of retraining. I'm not exactly sure what that's going to look like. I know it's no longer computer programming with all this vibe coding and stuff like that, but I do believe there'll be a big need for retraining, and I do believe there'll be a big need for classes and education. Now, what that looks like with AI tutors, and I'm not really sure. So it's definitely, everybody's guessing how AI is going to impact society and what the long-term impact on apartments and student housing is. But student housing historically has paid higher returns, but it's a much riskier product. If you miss your lease up, you're stuck for a year. So you should be paid more for the risk you're taking on a student housing deal. And it's also, it's like compressing 12 months of term in 2 weeks. It's a really painful process.
Yeah, I mean, and that usually comes with some of the brain damage too. It's
Yes. Yeah, very
um,
much so.
so the cool thing is you've got a lot of experience with property management as well. You're not just out there raising capital to bring it to the deal to get your position on GP. So tell us about your firsthand experience as an operator on the property management side.
Actually, I wrote a book about this because I've seen it again and again. I drive out to properties and I can tell immediately whether or not the property is well maintained, whether or not it's little details, weeds in
Oh
the
yeah.
parking lot, overflowing trash. You walk in and you see cobwebs in the model, you see dead cockroaches, you see all these little telltale signs. You see how the actual staff is looking, are they smiling, are they laughing, is there a positive? There's all these little things you see. And I broke it down into the 5 P's of property management. I took the 4 P's of marketing and just simply twisted a little bit and made it fit our industry. And the most important one is definitely people. And if you have the wrong team, there's no amount of spreadsheet shenanigans that'll fix a bad team. You have to address that first. And a lot of times that's the wrong person, it's the wrong training, it's the wrong incentives. There's many different levers you can pull upon, but that's a big one. Pricing. You try to lease an apartment complex for too much, you'll have a lot of vacancy and you'll have a lot of issues. You'll have high turnover. So that's another P. And then the promotions. It's really changed. When I first got into it, it was all paper-based, and then it went to Craigslist, and now it's Google AdWords, and now we're seeing changes in how AI is going to impact that. So that'll be interesting to see. And the next one is product, and that's what I was just referring to, what it looks like, the curb appeal, and those types of things. And then you get into process, which is a catch-all for everything else. And that's how the actual company runs, all the little systems and procedures, collections, inspections, you name it.
Yeah, you hit it on the head. The people that's a part of being in the armpit of the business is the people, and I say that because you're relying on people to put in front of you that they care as much as you, and all problems stem from somebody's lack of caring. That's all it comes down to. Just somebody who actually cares to tighten the nut down tight enough to where it's not going to come loose, or care enough to pick up the piece of trash, or sweep up that termite you mentioned, or the cockroach.
Yes.
It comes down to people and people caring. And when you've got people that are just coming in and collect a check, it makes things extremely tough, especially when you're a change agent coming in to change the environment, invest cash into the property, and show some meaningful, real change. And then you're dealing with the original employees that were there when things were in distress, and they're comfortable in that environment. You've got two different worlds, and you want them to see the light, but they don't care enough in some aspects to be a part of the change.
That's right. I've seen that, Josh. You're absolutely right. I think the biggest thing you can do there, besides changing that they need to be changed, is getting the incentives right. And sometimes it takes extra incentives, and those incentives don't all have to be cash, although cash is a great one. But a lot of times, property management companies don't realize how important those incentives are to people and how much they mean to them. And setting that up correctly and making sure you're measuring the right thing is critical.
What kind of incentive would you put in? Would it be a quarterly bonus? Because cash does cure all in a sense. It's a motivational factor. It's carrot on stick. So give us a example of a KPI and then a reward.
So I think you have to break it down into what the problems are. So I'll give an example of a specific deal. Bay Meadows. This is a deal that was a massive turnaround. It had like 1,700 code violations. The lender actually brought us in because it was a real mess. And they'd had 3 different management companies. They had 2 different construction companies. And we actually came in as actual partners in the deal. So when we got there, the team was demoralized. They were understaffed. They had lots of issues. So you have to set up an incentive program for the maintenance team. It has to be based on passing punch inspections and the number of work orders and the callbacks. And you have to set up measurable things. And they were really excited about those. And they need to be paid monthly, not just quarterly, because quarterly is too far away. The same thing with the leasing incentives. You want to pay them quarterly is great for the management team and those, but even then, you want to try to motivate them, even in some cases weekly. I was setting up different bonuses, be gift cards, different things like that to get them excited and create that excitement and buzz, and not the type of competition that causes people to stab each other in the back. I've seen that as well when you have leasing teams, basically shortchanging each other. You have to be very careful how you structure the incentive programs on a site.
Oh, that's 100%. It's like right now going through all of this because we've purchased 144 unit, and it's operating as an extended stay. So we have a transient component, and then we've got where we're turning it over to long term. But
Mhm.
it's the operations are extremely heavy. and you've got a staff that is comfortable in working in a subpar distressed environment, meaning that the operator before us just let the property go to hell, and they were comfortable with that. They liked the weeds, they liked the cobwebs, they liked the paint chipping, and we're coming in and working with the existing employees, adding a lot more people to the mix, but getting those incentives lined out to where you don't have people working against each other, and the property is the one that benefits and the guests benefit. If you can get all those in alignment, then I could see it being magical. But it's just getting things into alignment too.
It's definitely a painful process. Turnarounds are always difficult, and getting the right team is the most difficult thing. Once you have that, things kind of fall into place.
Yeah, and especially the hiring right now it's tough to find just people who can do what they say they can do without having to continuously hire for the same position over and over.
Absolutely.
What are some experiences that you've learned along the ways that some of the beginning real estate investors could have some takeaways and could maybe implement in their business right now?
It's funny. I actually have people reach out to me a lot and ask me what they should do. I had one individual talking about taking one of these courses, and they were going to spend $35,000 learning how to invest in multifamily. And I told them they should take that money and actually buy a small duplex or a house and actually get in the game. Join one of the investment associations. I think most states have some sort of investment group or association.
Like a RIA.
You can join. Yeah, RIA. That's correct. And get into that type of thing and actually partner with those that have more experience. Learn from their scars. Because if you get into this business, you're going to pay stupid tax. No doubt about it. And there are things you don't know. And it's things like not putting the proper contingency, not understanding the scope, not knowing the timing of how the reserves and the cash flow on the performa. You see these pretty performas, but you don't understand that's not how it all pay. I've seen this again and again in these financial models I get from potential syndicators, and they level out the cash flow. And I'm like, well, wait a minute, your occupancy is low here. You need cash here. You're going to have a shortfall. Go back and actually do a cash flow analysis and start with your bank account balance and build out your model that way. So you see these types of mistakes, but I definitely think getting with a more experienced individual and partnering with them, even if it's at a junior level, would be good for people. Starting at, you can't really learn how to swim unless you jump in the pool. You have to learn how to swim by doing the work, and nothing's going to teach you that better than actually buying a small deal and learning all the ins and outs.
Yeah,
and you're
yeah,
going to keep learning.
Your risk.
Yeah, absolutely. You're going to keep learning. So, for example, we just bought this deal. We had a termite inspection done. And I'm opening up the side of the building where we had some water damage. And sure enough, we have termites. Well, how can that be? We had a termite inspection. Well, did you know that your termite inspection, you can have it inspected, you can still have termites. It's only what's visible. They're not opening walls and stuff. And almost all the termite bonds and stuff you see now are pretty much worthless. They're not repair bonds. They're just treatment bonds. The treatment's not expensive. So you're constantly learning stuff in this industry, and you just have to understand that you're going to make mistakes and things are going to happen, and you have to make sure you have contingency. And I see a lot of people doing these rehab budgets and they put 5% contingency. That's not enough unless you have complete bid out on all your scope at that point.
Yeah. Well, and that goes towards the type of syndicator that you are. Are you relying on third-party property management in front of you to handle all the repairs? Or are you vertically integrated where you're handling the property management, asset management, and construction to be able to procure the labor and material at a cost basis? Because you can get a lot done if you're firsthand procuring material and labor versus relying on a property management that's relying on a GC that's relying on finally somebody doing the work.
That's very true. Very true.
And that's if you are truly doing a long-term career in real estate. I think that it's a must-have. You must control all facets of the real estate, the management arm, the construction arm, the asset management arm. And you've got direct experience with that as well. So if you could elaborate on that.
Well, it's interesting. We see almost all owners go through this process, and that is where they start out small and they don't have the experience and they hire a third party. And then over time, they grow their organization and they say, oh, we need to terminate the third party because they suck. And then they hire their own team, and then they realize, well, that team sucks too. It's just a question of control. So what I always say, we actually are currently using a third party. We've had success with third parties, and I've actually had multiple management companies that we started and built up over time. And what I would say is this, at the site level, it comes down to your property manager, your maintenance supervisor, and your regional manager. Those are your most critical, but you still, as the owner, have to be the asset manager. Your standards drive what they do. If they don't see you showing up, You're not checking for those cobwebs. You're not looking to the hallway. Is it clean? You're not doing the basics of property management. They're not either. I call it the beer goggle problem. I remember once I drove onto this property and there was a beer bottle there, and I walked into the regional. She was in there. Said, "Hey, did you walk the property?" She said, "Oh yeah, I walked everything." I said, "Okay, is anything you want to report to me?" She goes, "No, everything looks good." So you didn't see anything? Nope, nothing. So I came back the next week. Beer bottle was still there, and I said, "Guys, didn't you see that?" And I showed them the picture. I was like, "No, I didn't even see it," because it had been there, and it just kind of fades into the background. And I see that a lot. They also don't like walking behind buildings, walking under buildings, looking into crawl spaces, and some of the places you have to look. And that's where some of those problems are hidden.
Oh, for sure. It's like music to my ears this morning because there was all of those things walking the property this morning because every morning that's just all the properties. There's one particular that we've got. It's a large. I mean, we've got a large project going on, and it's just you got your GM in there, and walking the property is so easy, but it is so hard for people to actually do it. And it goes back to caring. There's beer bottles there. There's a towel over there by the pool. There's an umbrella that's broken because the storm blew through last night. Just the little things, but perception's everything. And
Absolutely.
it's just so easy to get these things right, but it's so hard for some people to just figure it out. So third-party property management, I agree. If you've got the right firm, they've got levels. They can bring more by economies of scale. They can bring more than just yourself. You can plug into their team. Smart, like you had mentioned, the smart thing is getting into something small, a duplex, a quad, getting the firsthand experience and figuring it out, hedging against something big, and then stepping into where you're graduating from there, bigger and bigger. And that's exactly what you did with your career. How many units do you all have under management currently?
We only have 576 beds. So we sold our last 756 bed student housing deal in Auburn last October, and we had basically bought and sold at QR Capital about 9,800 units. So basically, we've been really struggling to find deals that pencil or underwrite. The deal that we bought was actually a foreclosure that had been foreclosed in 2009, and it was actually at an auction. So it was definitely a more difficult deal in a secondary market that we typically wouldn't even look at, but it just was an incredible opportunity. We like to see a story. We want distress. We want deals that have some sort of discrepancy between the comps, the real comps, by the way, not the broker BS. We want to make sure that we actually, in this case, it was 17% below rents of the comp across the street, and it was an inferior product across the street. So we were like, this is just a great case of mismanagement that we can go in and fix and turn it around.
The best software that I've seen so far for using comps or finding comps is it's called HelloData.ai.
We use it as well.
Man, that thing smokes everything else out there just because you can drill down and actually see what other people are charging on fees and then amenities and quality of the property. So that gives us a great baseline of where we can push things to and still be within pro forma and just gives us the road ahead. What are some other AI platforms that you've found that are useful?
Well, obviously everybody uses ChatGPT, but I think the real magic comes when you create your own custom GPTs, because I actually set up one to do contract abstracts where it'll break it out and tell me all the issues. It'll do a general due diligence analysis. It'll do a rent roll analysis. I really like the O3 part of the operator in it. It's the more advanced one. It's incredible what it can do. But I also use Claude. I use Gemini. I like Gemini's deep research. I think it's really good. I've messed around with Perplexity. I've tried, make.com and N8N and done some of these automations to do different things. I just wrote a post about using it to do an accounting journal entry for the closing. So I actually did the manual accounting closing entry, which takes a couple of hours. And then I took the entire information, dumped it into my ChatGPT, and then I actually showed it examples of good ones and said, okay, do it. And it actually did it. It took 4 tries. It wasn't perfect. And I understand that if people think you can take it and just dump it in there, you have never done an actual closing entry for a property before, it's not going to go well. You have to have the knowledge to know if it's garbage in, garbage out. Yeah. And if you're missing that piece of it, it's just like when you're looking at a real estate deal, you can teach the AI what you're looking for, but there are all these little nuances, these little things that you have to understand. And that comes from experience, wisdom, and that usually comes from screwing something up.
But screwing something up adds to your wisdom. So that's why that's why they call it wisdom.
That's right.
And agents. I know ChatGPT has a deep research piece that we dumped our rent roll in,
Mhm.
and we want to see what disruption looks like. What does this whole AI thing look? Things are getting interesting behind the scenes. If anyone's following it out there, so a lot of people are, but a lot more people are not. So, what is the impact on our rent roll? What's the impact on the people, geography of our properties? And it's interesting what it spits out. The deep research function on ChatGPT put a pretty good report on how to kind of prepare. We do a lot of subsidy, Section 8
Mhm.
percentage of our portfolio, which I think is more of just a hedge. We also rely on market rate tenants
Mhm.
as well, for sure, to
Yeah.
help push the rents. But it's good to kind of get ahead and hopefully know what you possibly don't know. And if anything, it tightens up your rent roll with
Yeah.
kind of getting ahead. But
I'll give you a great example of we used it for a due diligence analysis. So a deal got brought to us, and it was a developer in DC trying to sell a deal, and it was in progress of being constructed, and they basically wanted to, I guess it was rescue capital is what I would call it, and they wanted us to buy the deal and kind of bail them out. And I basically went to this system and dumped it in there, and we were listening to the broker, and he was giving his information, and I asked the AI, "Hey, here's the address," and I had a very detailed prompt, but the AI helped me write, by the way. And it spit out that they had actually failed the tax credit analysis part. They had actually done incorrectly, and they actually had all these issues with their application, and they had been put on hold. And there were other issues as well, lawsuits, everything was in there. And I was stunned at how much information was just every public record. It just went through, pulled it, showed me, listed it all out. And I was pointing out things that the broker didn't even realize were going on the property. And that was from a very quick, it took 30 minutes for it to search for it. But I was kind of stunned at how much information I could pull using that. And imagine how many Google searches. I think it did 187 Google searches. It would have taken me hours to do that. And the AI did it in 30 minutes, and I was working on something else. So
yeah.
that is incredible, I think.
Well, and it's you couldn't even find a human that could have done all of that for you. One with the time results that you got it back, but then even
Mhm.
maybe be as thorough or go as deep as it did for you. But
Mhm.
it gives you a level of a superpower that if you are using it, you get it, and if you're not using it, you're going to be left behind in different capacities. Um,
Absolutely.
we're plugging it into our Appfolio property management, and if anything, it can help us answer the phones or answer high level questions, support maintenance tickets, leasing questions. That'll just be the beginning, but we'll see what it can do to as whole as the organization can expand out. I mean, we can buy back our time by putting some agents in front of us, and then our people on the back end we can now leverage and handle more. So there's so many different tools, but it's almost you don't want to go too fast and far as ahead, because something new comes out, and now you're rebuilding on something new that now is better and more effective and efficient. So it's
Absolutely.
things
Yeah.
are changing so fast, but
Yeah. I think that, yeah, NVIDIA's CEO said that we're going to have AI employees. And I do think that when ChatGPT 5.0, or maybe it's 6.0, but it's definitely going to be here soon. And what that would mean is you would basically give it all the examples of the work that you wanted automated. So good product, and then you give it a bad product, and it actually learns. Just like they teach the AI to actually learn how to recognize a cat, the AI can learn good from bad, and it can totally automate that entire process. So I envision in the future, we'll be working with our AI accountant, we'll be working with our AI asset manager, our AI property manager that would actually be helping us. Now, it's not going to replace the people dealing directly with humans just yet. I've seen some implications of the leasing system, and I'm real curious to see how that tracks compared to actual humans, because I still think there's a lot of people that would rather deal with a human being. Have you ever been on put on hold or those voicemail hill things? I still think we're there. Now, as older people die off, I'm sure the younger generation will be used to that, and it'll get better and better. Like 11 Labs came out with something you could almost not tell it was an AI.
yeah, you can't tell. I
Yeah,
mean, it's
yeah, yeah.
Starbucks actually is has rolled out where they're using that same technology in their
Mhm.
drive-throughs,
Yeah.
and it's incredible. We actually
Yeah.
have one in Westchester, and I was
Mhm.
like, wow, that sounds really good, really
Yeah.
good. And come to find out, there was a beta mode on their AI
Wow.
taking orders, but that's the customer service piece where you don't have to worry about the temperaments
Yeah.
as far as people on people. But um, you had mentioned my kids. I mean, they're growing up with tablets. We didn't have tablets. We didn't have phones growing up. So um, that generation is going to be much different than what I think we all see, and they're going to grow up with it. So, and interacting with a robot in your house, I think that's next. And then a generation that's born with a robot in their house. I don't know. It's hard to imagine now, but we're so close to everything. I mean, Elon announced that that Optimus is going to be available by next year.
I think the thing that everybody's misunderstanding, though, is if you read history, the Luddite movement will be alive and well. And you're going to see legislation slowing these companies down and putting the brakes on this. Right now, AI is not really, it's stopping some jobs from being created, but it isn't taking wholesale jobs. Mm-hmm. For example, your Tesla, if they do roll out the self-driving, I mean, 25% of the nation is drivers, trucks, transportation, and all that. Imagine if you simply said, hey, none of you have jobs anymore. Massive impact. There's going to be unions. There's going to be protesting. They're going to be voting. They're going to be putting taxation on these companies, because think about your margins. If in fact you could run your, the automation process, definitely saying you're going to have AI leasing agents. You could have one person instead of, say, your large property, instead of having 4 or 5 leasing agents, you might have one, and you have one manager instead of an admin. You won't need a assistant manager anymore. They can handle the collections. They can handle any of the customer inquiries, all that stuff. And eventually you get to having robots doing the maintenance work orders and things like that. So think about the margins in the real estate business, what'll happen. So of course they're going to tax you, and then they'll take that money and then redistribute it through universal basic income. And that's what they'd have to do.
Right. Yeah, they have to. I think it's certainty of execution too, because, did you follow up with that prospect? No. Yeah. Did you send the application out in time? Those sort of things, just certainty of execution.
Absolutely.
Getting things done, which then of course, I think the economy just expands out. It expands because now one person can manage 4 AI agents versus just themselves. So now your company can now absorb more and do more. We'll see. True. I mean, there's so much coming down the pipe so fast, but it's getting involved and actually just listening and seeing what's coming too, and just being aware of what's happening.
Every time the software updates, I try to do new things with it. And I'm constantly pushing up against things that it can't do, or things that makes lots of mistakes with still. So it's definitely gotten so much better. The hallucinations are much less. I'm seeing a lot less drag, and it just doesn't, like one point I said, cite all your sources, and it would actually create these elaborate, citations, and I would click on them and they would be dummy links.
Yeah.
So you have to be very careful. And then what I did is actually created something called the Red Team Skeptic. And anytime I get something from the AI, I actually put it into the Red Team Skeptic and have it tear it apart and see where it might be weak or where there's a problem. And it breaks it out and spits out, well, here are the concerns with this particular report or this analysis. So it's a way of fact checking. I think in the future, you'll have agents that are built upon, and you could actually have the Red Team running in the background, double checking the AI.
Yeah, maybe that Red Team comes from Grok or Perplexity against ChatGPT. So because they are biased, ChatGPT is definitely 100% biased.
Yeah.
And then you can check that out on Grok, and then kind of just see what the general consensus is on the feedback coming out. You wouldn't think it, I mean, because they give great answers, but it's the little things that the bias part.
Yeah.
Very cool. So where do you envision your company being at here within the next 5 years, unit count or asset types?
It's interesting. We definitely focus on apartments. We like conventional. It's hard to say the number of units that we would buy, because we only buy if a deal meets our criteria. We're not forced to buy. So my partner and I look at deals and we're like, does this make financial sense? Do we want to put our capital into this type of asset? And most of the time the answer is no. But if there really is an economic dislocation like 2008, which everybody kind of thinks there's going to be some crash, who knows? But if interest rates come down, then of course more deals will pencil. Right now you have negative leverage. It's hard to make numbers work. So we're not constrained by capital. We're constrained by deals. And we look at a lot of deals. Like we looked at probably over 100 deals and we found one deal to buy. Yeah. So it's just very hard to find deals that pencil in this environment. A lot of the lenders, rightly so, have been rewarded for extend and pretend. So why not just extend some more and hope rates come down? And think about all the sellers that, they're basically, there was a deal that we actually looked at on the South Side. It was a rescue deal. The lender was trying to do a short sell and everybody went to the bid, and we came back and said it's worth 85. They wanted 125,000 a unit or something for it. And they didn't get the price. So the lender basically said, okay, we're going to hold. And they're trying to build the rent roll, finish the renovation that was started, but the equity they're screwed. They've lost all their equity. So now they're just working for the lender, trying to get out of the deal at this point. Maybe there's a wish certificate attached to it.
That's exactly it. It's purchasing the deal to where it even is financially motivating.
Yes.
Buying on performa is ridiculous. You're giving your equity away.
Yeah.
You still have to do all the work, raise the rents, go through all the brain damage to get the property where it's performing.
Mhm.
And then at the end of the day, when you're ready to refinance, there's nothing there to pull out because you've just given it all. You get it all away 3 years ago.
Absolutely.
So I get it. We've been fortunate. Everything we bought, sounds like you too, has been well worth it because we've been patient and diligent with our buying principles. It's just, but slow. It's very slow. So it's.
Yeah. We were looking back at our track record, and of the 9,800 units that we bought and sold, our average IRR was 24%. But I'd like to tell you that was evenly distributed. It wasn't. We had some 8%ers, and then of course we had some really home runs, and that kind of evens out those numbers. So everybody thinks they're a genius in a falling interest rate environment where cap rates are compressing, and then of course when the market starts moving against you, that's where you realize whether or not you made a mistake with your structure, your financing, your capital stack, or your execution. All that stuff can come out. So it'll be interesting to see if we actually do get into an economic downturn, and there will be some real opportunities. But who knows? AI might solve all these issues, and we see this economic boom that you were talking about, and that could happen as well. I gave up trying to figure out what was going to happen. So just focus on deals that make sense, that meet your underwriting criteria, and they're few and far between. If I see a lot of deals trading though, and usually they're the big REITs or the big funds, Blackstone. They're bought like $500, $1 million worth here. They bought huge deals, and I'm seeing a lot of that. But usually they're higher end deals, better, well located, and they're paying sub 5 caps.
Yeah.
So I just looked at a deal that we looked at, and it was a Class C minus deal, and it traded at a 5.1 cap rate. And that's
all cash deal though, right?
Well, no, this wasn't. This was just a regular finance deal, and I was surprised that the only way I could think that could work is if you had some big assumptions on rental increases or something like that. So,
yeah, or a data center coming in that you don't even know about yet, insider deal.
yeah, maybe, yeah.
Interesting. Yeah, I think we might see Powell get fired if things don't move on that end. I don't think they're going to stand around and just wait for his term to be up.
Yeah,
I think they're hinting that every month that there might be a shake up there, and we'll see. I think if interest rates do come down, I mean it'll open up the floodgates. A lot of people are just waiting to be able to refinance or sell, and a lot of people are waiting to buy too.
absolutely.
So very cool. What are some books that you would recommend? You've got a lot of books behind you. What are some that you would recommend to the beginner?
To a beginner, that's interesting. So I think that for most beginners, there's everything from the property management side of the business to the construction side. So there's so many different books you could recommend for that. I would be more general. Like I was thinking about what books I would recommend to somebody. And I think the books like Sam Zell's book, Am I Being Too Subtle? I think it's a great book for someone that's interested in the business, that wants to get a better understanding of what the business is like. On the construction stuff, the problem with construction books, a lot of the information in the construction books is outdated by the time it's printed because things change so quickly. There's some great books that have been put out on the construction side. The property management, I think you can go to the IRM, Institute of Real Estate Management. They have a whole bunch of books on property management that can teach you. They also have all different classes you can take as well. That's good for people that they want to learn the property management business. My partner, he jokes that there's a sixth P, and he calls it principal involvement. And I think you were alluding to this as well. You see things differently. When you come onto a property as the principal and the owner, you have a different viewpoint, and things really matter. And I think that that's something that only comes from ownership. Yeah. And I try to teach that to people. Say, hey, you got to look at it like me. So one of the things I always tell people when I come onto the site is after I train them, I say, okay, I'm coming to the site, and you know what I'm inspecting because I've done this again and again with you. Your job is to try to catch everything that I'm going to catch beforehand and send me a list. So before I show up, it should be on there. And if I don't catch anything that you didn't catch, then I'll give you a bonus or a prize or something like that. And it creates that competition. They know. And then, of course, they're engaged and they're trying to fix it. So, again, we come back to these incentives and the power of these incentives. in terms of great books, there's so many wonderful books out there. I remember when I was in 8th grade, I walked in and I saw this book called Think and Grow Rich. And I was like, what is that? By Napoleon Hill. And I opened it up and started reading it. And I remember the hair on the back of my neck stood up when I read the chapter about Edward C. Barnes on desire. And that just blew me away. So that's an incredible book for people that just really want to get motivated. I think that one of my favorite books of all time, though, was it's actually from Darwin to Munger. Seeking Wisdom is the name of the book. And the book is incredible. It does a lot. I'm really a big Charlie Munger fan. I think he was one of the wisest men alive. And he's just so wise. And I really am constantly trying to learn. And I always try to reframe. I actually have a GPT chatbot that actually is trained to think like him. I've taken all his speeches and uploaded it. And then I'll take problems and I'll propose it to him. And I'll say, what do you think about this, Charlie? And go back and forth with the AI acting in the tone of Charlie Munger. So you can actually have a board of directors I've created. I've got Steve Jobs on there. I've got all these different people, and I can actually throw problems in there and they spit out their different ideas. And it's fascinating how the AI can take on those tones and personas, especially if you upload it very well and you prompt it correctly.
Yeah, no, that's a huge hack there. If you use projects, each project carries its own separate memory. And then you can go to each one and with its own problems and solutions, and it's a separate instance. That's huge. I like that.
Have you used Google Notebook LM?
I have not. I've heard you mentioned it. Now I've heard of it multiple times. So it sounds like I need to.
You need to check it out. And the reason you need to check it out is you can go in there and do Discover, and it'll pull out resources on the web and pull YouTube videos, and it takes the entire transcript. So I've got one with Alex Ramosi, and I've taken all his videos and uploaded. And if you have a pro account, you can get 300 videos or feed sources into it. And then you can have conversations with it. And now that they've upgraded to Flash 2.5 Pro into the model, it's really fast. You can do mind maps. You can actually create a audio podcast like we're doing right now and have discussions. And you can say, I want a podcast on this section of this one and zero in on that one thing. So I've uploaded entire books in there and created this okay, I'll give you a great example of this. So I'm on a HOA board, and I took the entire condo docs and uploaded it into the large language model, the notebook thing. And I can ask it legal questions, and I'm pulling out data and information the lawyers don't even know, because it's, this is massive document. And I'm like, we have this issue. Is this covered or not? And it'll spit out this exact report. And so it's a great tool. I use it all the time. So another tool I forgot about was the large language model, the Google Notebook. So I really think that's a great tool that the users and listeners should try out. It's great.
Yeah, because I've heard of it, and now you're mentioning it, so I definitely need to. That's like I have not invested into an actual new computer that has AI chip in it yet.
I don't think you need to. Yeah, I don't think you need to.
There's so many. Well, I tried to download this. It's MCP, I believe, but you're able to operate your computer using just voice commands. My computer was not having it. So but to get to that level to where you're able to now operate everything on voice, you don't have to key it in. That's next level. So that's what I'm hoping to achieve here pretty soon. So very cool. Ken, if somebody wants to get a hold of you, learn more about you and learn more about your company, possibly invest with you guys, how can they reach out?
I'm on LinkedIn. Just look me up on LinkedIn, Ken Doble. I pop up on LinkedIn. I try to post something every day. Sometimes it's AI, sometimes it's property management, sometimes it's just me thinking about some book. I read all the time, so I love books, and I'm always writing about books I've read.
Cool. Awesome. Ken, definitely appreciate your time. Look forward to following you. Thank you.
Yeah, no problem. Thank you very much. Appreciate it.